just tell me, is trading just a fancy word for gambling? A lot of people jump into the market thinking it's a shortcut to getting rich, but they end up losing it all. So what's the real difference? Is it about skill, or is it just luck? Let's get into it and separate the myths from the reality. First, let's talk about gambling. When you go to a casino, you place a bet on a game of chance. Think about roulette or a slot machine. The outcome is almost entirely random. You can't analyze the past spins of the wheel to predict the next one with any real accuracy. There's no strategy that can consistently beat the house edge. Gamblers rely on hope and luck. They're chasing that instant thrill, that one big win that changes everything. But as we all know, hope is not a financial plan. In gambling, the odds are mathematically stacked against you over the long run. Now, let's contrast that with professional trading. Trading, when done correctly, is a business. It's not about luck. It's about managing probabilities. A serious trader doesn't just throw money at a stock hoping it goes up. They have a system. This system is built on several key pillars. First, there's analysis. This could be technical analysis, looking at charts and patterns, or fundamental analysis, digging into a company's financial health. Second, risk management. This is crucial. A trader knows exactly how much they're willing to lose on a single trade before they even enter it. They use tools like stop losses to protect their capital. Third, they have a back-tested strategy. This means they've tested their trading rules on historical data to see if it has a positive expectancy and edge. And finally, they have the psychological discipline to stick to their plan, even when emotions are running high. So, the biggest difference isn't the platform, it's the approach. You can gamble in the stock market, and many people do. If you're buying stocks based on a hot tip from a friend, without doing your own research, and without a plan for when to sell, you're gambling. If you're revenge trading to win back your losses, you're gambling. A trader understands they won't win every single trade. In fact, many successful traders are only right about half the time. Their success comes from making sure their winning trades are bigger than their losing trades. It's a game of longevity and consistency, not a sprint for one jackpot. This all comes down to psychology. The gambler has a short-term mindset. They crave instant gratification, get greedy when they win, and fearful when they lose. They chase losses and often blow up their accounts. A trader, on the other hand, thinks like a business owner. They are patient, waiting for high-probability setups that fit their strategy. They accept that losses are a part of the business and use them as learning opportunities. They focus on flawless execution of their plan, not on the outcome of any single trade. Most beginners fail not because the market is rigged, but because their mindset is wired for gambling, not for trading. So if you want to succeed, you have to make a choice. Are you going to treat the market like a casino, or are you going to treat it like a profession? Build a plan, manage your risk, control your emotions, and focus on consistent execution. If you can master your own psychology, you put yourself in a position to master the markets. Thanks for watching. If you got some value from this, make sure to like and subscribe for more insights to help you on your trading journey. See you in the next one.